And that's what I'm covering here. I'm helping you refine your level of focus so you can pinpoint what your model is going to operate in terms of time. So that way you're not doing more than that's required. You're not diluting your attention, and you're also controlling fear of missing out. Because if you're operating in a business model or trading model that allows you to only operate in this 2 or 3 window time period of every individual day, you turn the charts off and you walk away and you exercise discipline. Over time, you won't care what the market has done over here or this time of day or who made this, who made that. You're trying to get better at this. You can't improve by worrying about how much other people, me or anyone else, is making or losing, or how often we get it right or wrong. You can't do anything to make yourself better by doing that. So why are you worrying about it? If you're pocket watching me or anyone else, or if you're entertaining other people that do that, you are wasting your time. You're wasting time to groom yourself into the analyst that's necessary for that profitable trader to work with. Because the trader's not going to be doing anything except for what the analyst says is good to go. And you can't do all these trading sessions in the beginning. You can't. Now, you can study and backtest all of them. That's not trading. That's a good use of your time. But you can't go in as a new trader trying to do all these things simply because you've heard about it or have talked about it. So therefore, you're going to go in there and you're going to figure it out. You don't figure it out that way. You study, you backtest, and you figure out where it fits for your life. That's the only figuring out you're doing. Does your life allow for you to trade in the London hours? Most people can't. If you can find time to get in there and trade in the pre-market hours before 9:30 and look for a setup between 7 o'clock and 8:30. Okay. There you go. You can find a setup that will probably yield you an opportunity, and then you're done. Where everybody else is waiting for the 9:30 opening at equities, opening bell in New York, to find their trade. Or if they trade the silver bullet model, they have to wait till 10 o'clock. And this is funny when I see people, I'm taking trades and I'm doing something before 10 o'clock. And they're like, wait a minute, didn't you say we have to wait? Who did I say had to wait? You. I didn't say we. I said you wait until 10 o'clock. I'm not saying we wait till 10 o'clock. I said you. I'm tweeting you wait till 10 o'clock. That's not me saying I'm not going to do anything else or anything in addition to, because I have a varying spectrum of experience in terms of students. Like I have long-term students that have been here. I have charter members that are in my mentorship. I have students that have been with me longer before I did mentorship and never joined my mentorship. And their level of experience with me is much more vast than yours. And then I have the neophyte that just come to me today in this discussion today. First time they never heard me before and they're listening to it. It probably doesn't make much sense to them. But their experience with me is brand new. So when I counsel you to do specific things or not to do certain things, that doesn't mean I'm limited to that. But to keep the growth of the entire community going, not just being a one-trick pony, which you can clearly see I have a whole lot of ponies in my fold. I got all kinds of models, okay? And my models work because of the element I'm teaching here, time. I'm looking for setups in the New York session. The characteristic for New York is a continuation of what? Whatever London did. When does that not occur? If the range expansion that occurred in London and then continues into New York and it trades to a higher time frame PD array, something that I would have been targeting anyway, which was the basis for the draw on the bias for the weekly chart and or daily chart. So in other words, if it gets in my higher time frame target, then what shifts in my analysis? Market reversal profile. Otherwise, I'm looking for New York session to continue in the direction of whatever that higher time frame draw is on the weekly and or daily chart. And I'm going to submit to that. And I'm going to look for the things that I teach you that the algorithm will show in price delivery, inefficiencies, runs on stops, the whole business. I'm looking for those factors to come in agreement with that. And if it doesn't materialize, Or if it's wishy-washy, it could be done and explained both directions. That's low probability. It's not a trading environment I'm going to trade in. And then I watch, or I'll tell you, this is what we're looking at. We're watching it. So it gives you experience to see what it's like when it's not optimal, but still putting chart time in. You need to have that. And I have the other students that are coming here because their attention span is the size of a gnat, and they want everything right now. It's already 3 weeks late. You just met me, and you want to get right to the point of, hey, take a trade, or you don't know what you're talking about. Or you don't know what you're talking about because you're doing this and you're doing that and you're not entertaining me. This is not how I want to be taught. Then go somewhere else. I promise you, there's a lot of people out there that's going to teach you wonderful things to get into the marketplace. The results are not going to be what you would get in comparison here. You're not going to be in control of yourself. You're going to be constantly looking for a new high, not in equity, but in dopamine. And that's what social media traders and influencers present to you and provide you. I'm not trying to do that. Now, when the market performs a specific way, then obviously I'll put a meme out there, a little funny little, tweet of some kind to anchor it emotionally to you. Not to make it look like we're celebrating, ego or anything like that. It's to make you feel like this was worth you watching it. And if it causes you to smile or laugh or, think to yourself like, oh, no, I see these a ham, it anchored it. And that's all I'm aiming for, because it's meaningful, because you didn't take a trade. So I have to give you that cookie, that yellow belt, from a white belt to a yellow belt. That's that little progression for you as a student, because you didn't take anything out of it money-wise. You didn't lose any money. You didn't make any money. But I have to anchor it to something that you can recall or inspire you to journal it. Because until it makes its way into your journal, it's wasted time and attention. And I'm going to say that again. If you're watching or listening or look at my tweets and you do not journal the things I'm calling your attention to, you are absolutely wasting your time. You're not wasting my time. I know this stuff, but you're wasting your time. And that growth, that learning curve is being elongated and pushed further into the future by you not doing the simple thing of simply logging the experience. What does that mean, logging it? Framing it in your chart by time. When did that setup form? In the times I'm talking about here. And we have a couple more I'm going to get to, but you look at it in the basis of time. And how does that move fit in the grand scheme of the last 3 trading days? Where we are in terms of what the weekly candle was likely to do, expand up, expand down. Where did it occur in the calendar event for that particular trading week? Did it occur on the heels of a medium or high impact news driver? In other words, if you look at the economic calendar, if a medium impact or a high impact news event or report or something like that, was it on the heels? Does it occur after that market report hits the wires and people can see the data? Or was it in between a medium or high impact news day? All those factors mean something. And you have to find your own comfort in how you're going to trade. I don't say traders need to be afraid of medium or high impact news days. We want those days, because there's going to be a lot of manipulation. And then if they're going to manipulate the market, that means they're going to punish one side of the marketplace. And we can see clearly what side's going to be punished. I do this every single week. Every time I sit down with you, I outline what I think is going to happen. And for the most part, it pans out. Not always, but most of the time it does. And it's all based on time-based principles. It's scheduled volume inflows, that these things occur because this is where all the orders are going to come in, or they're going to run for the pending orders that are existent in price action, and how you're going to engage that. And it may feel like a whirlwind of ideas that you're being confused by, because I'm always introducing something, or I'm executing on a model or approach that maybe I haven't taught you yet. But I don't like sitting down anymore, because I've been here doing it long enough that people know that I can do this. And students know that I can do this. Even the people that don't like me know I can do it. But they just want me to jump and dance around for them. Okay? And that's entertainment for them. I want to be able to show you examples and then teach you the logic that was utilized in it. Not like I've done in the past, or I've taught many things theoretically. Say, okay, here's conceptually, this is what you do, da, da, da. And then people go out there and they can't do it themselves, so they assume, oh, it doesn't work. Wrong. You can't make it work. I wouldn't waste my time putting it into rules and presentations if it wasn't logical and if I couldn't do it. So I've switched my MO to now doing the thing, showing it, and then going in and teaching it conceptually. And then I disarm them because I've done it. This is what I've done. And then I go back in and I can show you, this is what I utilized. And then you can take that logic and go into back testing and see it exists, not just in that example, but it exists in many other examples. And it might become your model. But you decide that. I don't decide that. And it's very difficult to be a mentor because I want to be the guy that make it easy for all of you. Here's the one hit wonder. This is it. This is all you have to do. Do this. And you'll be able to make money all the time and not lose any money. And that would be great. And I wouldn't monetize it. I would give it away for free. I promise. I swear to God Almighty, if I had one thing that simply worked one way, only had to do this one thing, it would be given to you for free by me. But practically that doesn't exist. Realistically, it can't be obtained because all of us have our own individual quirky characteristics, their own personality, and you have character flaws. All of us do. And you have to limit your exposure to these markets because they're Rorschachs, they're ink blots. You're going to see what you want them to show you. You're going to read into these candlesticks whatever you want to see happen. Now, if you're anticipating things with a logical, rule-based idea based on statistical probabilities and things that have occurred in the past, and that's your reason for doing it, then okay, fine. Then I agree with you looking at that ink blot, that these characters line up in forms of candlesticks. We see a narrative in there versus, well, if it does this, then I'll do that. That's reacting. We're not reacting to price. We're anticipating it. So in New York session, whether you're a forex trader trading between 7 o'clock and 10 o'clock in the morning New York local time, or if you're an index trader trading anywhere between as early as 7 o'clock in the morning all the way up to 11 o'clock. You don't want to take any new setups after 11. Unless, now here's the caveat now, unless your model is to trade in the lunch hour, which takes much more experience. In the beginning, I don't want you to try to do that because you probably don't know very well where liquidity would be resting, how it would work against the range that's already formed for that particular day. You wouldn't know what liquidity pool to aim for, what specific low. And if you think about it, when I do trades, well, look at what happened on Thursday. I did it real time. I said, okay, I'm taking 3 of the remaining 6 contracts off because now we're 50-50. Would you have known enough to do that? Chances are probably not. But I left 3 contracts on in the event that I, as the analyst, I, as the trader listening to the analyst in me, was incorrect. So if it was to go lower, I still had 3 on, but I didn't have the 6 on that I had on. I had 9 contracts short, took partials below an old low on a limit, then 3 off because it didn't continue, and left 3 on with a stop that would, if it got stopped out, it was in the black. It wouldn't be a losing trade. It would be a missed opportunity on the final balance. Lunch trading's like that. It takes experience. And sometimes I'll get that lunch hour wrong, which is why I don't do a lot of it. But when it's really obvious, when it's really, really obvious, I share it with you. And you see people say, you taught us not to teach, you're teaching us not to trade in the lunch hour, and here you're trading the lunch hour. I'm the teacher. I'm teaching you when I can do it, when I'm comfortable doing it. It might be a model for some of you. And you disregard everything else out there. And that sounds crazy, but I'm making an allowance for who you are as a person. You don't know what you don't know yet. You don't know what impact certain things are going to be for you as a student. You don't know what it's going to be like when you find your model. It's going to be something completely diametrically opposed to what you thought trading was all about. You find your profitable model and you're consistently finding setups, and you're going to look back and say, I didn't know anything. Look what I'm able to do. And this is what I'm doing. This is all I have to do. If I just live and bloom right where I'm planted, I'll do whatever I need to do monetized in the future on these ideas. And then you let money management do the heavy lifting after that. Because if you can find 5 handles consistently, every setup that you look for, if you just find 5 handles that nets you that, Minimum. You don't need to do any more than that. You literally can carve out independent wealth. And that is defined by however you want to define it. Whatever dollar amount, given enough time, compound interest will allow you to get there. But you can't do that if you're jumping around trading in the New York session, London session, afternoon session, PM session. You're just trying to get in there and do everything. No. Back test all those sessions. Yes. Actively trade and anticipate your setup in every single one of them. No. The only thing you're doing is compounding the likelihood of failure, losing trades, and drawdown. And you're new. What are you going to do when you have drawdown? You're going to want to fix it real quick because a Band-Aid ain't going to work for you. What's a Band-Aid? Take the boo-boo, limit it, cover your loss, cover your little cut, your paper cut, cover it up, and walk away and let time do the healing. That means don't take any more trades. That's hard to do, isn't it? But you don't understand. I gotta go look at myself in the mirror, ICT. I did something I knew I shouldn't have done. I gotta fix it. You're not in the right state of mind to fix it. And you're gonna look at these next sessions, like I'm covering here in the same trading day, and think that you're gonna have the skill set while you're in drawdown, mentally, we're not talking about the mental, not the mental, but the financial aspects of what drawdown you may have incurred. You're in mental drawdown. You're now a dangerous wild animal. And you're going to turn yourself loose to your money, to your account. A caged animal, a cornered animal, poked and prodded, now made aggressive. That's what you are. You're aggressively trying to take back what somebody or something or the market took from you when you did it to yourself. The Band-Aid approach is the right way. Limit it, stop the bleeding, come back when you're ready to do it again. But not the same session. That's how a brand new trader should do it. Not, I got to fix it right now. No, you don't. Who said you had to? You, the wounded animal, saying that. You're home. You're safe. You're in a position where you can't lose any more money. You are out of the market. You've been stopped out or squeezed out. You're done. The damage is done. Stop the bleeding, put a Band-Aid on it, and come back when it heals. Put one sleep between your drawdown and your next trade. Use that as a rule-based idea. Let yourself go to bed and sleep a whole night before you take another trade. It's hard, but you desensitize yourself. I'm sorry. I go on these rabbit trails, and it's completely outside the scope of the notes here, but I feel like I'm talking to somebody. I don't know who it is, but if that resonated with you, give me a notification on Twitter that it found its home in you. But the New York session is a continuation of whatever London is. So if London was going down and it has not reached your higher time frame daily or weekly objective, we expect some measure of short-term retracement and then continuation in the New York session until the higher time frame weekly or daily objective that we would be reaching for as a draw on liquidity, the target. When that's hit in the New York session, then you are entering New York reversal profile, not market profile where they have the vertical volume bars going horizontally across the chart. That to me, I don't use that stuff. When I say profile, that's like a schematic or a roadmap or a visual representation of how the market should perform if you were looking at it from like a line chart basis, how it should look after the fact. But we're anticipating it to perform or behave a specific way. So New York session's continuation of London, and then New York goes into market reversal profile, where whatever happened in London in the early stages of New York now reverse, and the market goes a different direction. Whether if it's going lower, now it will go higher, or if it's going higher, it will now go lower. If and when it hits the weekly or daily objective that we were aiming for, that framed our bias or premise behind our trading week.